Hi, Josh Barker with Josh Barker Real Estate. And thank you for checking out our market update for the month of May 2025. Let's go ahead and dive right into the sales report by looking at the total sold in the month of April. It finished at 165 properties that closed escrow. Now that's down roughly 17% compared to last year when there was 201 properties that closed in the same period of time. A lot of the reason for that obviously is that with the interest rate environment being higher, it's having a bigger impact on affordability, and that's pushing our sales volumes down. The next thing to look at is how many homes are actually for sale right now. So if you look at last month, we averaged 827 properties for sale. Now that's up over 32% compared to last year. We had approximately 623 properties for sale. So from a buyer's perspective, this is good news because obviously you have more homes to choose from. However, on the selling side, it is beginning to have an impact on days on market. In fact, if you look at the overall days on market right now, we averaged 92 last month. If you go back a year ago, it was only 85. So it is climbing, and that's an indication that things are beginning to level off. If you look at the absorption rate, and this is how many homes are for sale and how many months it might take to sell off those homes based on the current sales volume, we have now transitioned to almost a 5-month supply of homes for sale. That means we are now firmly settled into what we call a neutral market. Anything from a 0 to 3 month supply is normally a buyer or seller's market. A 4 to 5 month supply is normally a neutral market. And anything over 6 months supply is normally going to be that buyer's market. So right now we're at the tail end of that neutral market, something for us to be keeping an eye on. To zoom out and look at some of the bigger things. So I've been having some questions about the foreclosure market. And so I wrote down some statistics I'll share with you now. Some of it's pretty interesting, but here's what we got. Right now, according to Property Radar, in Shasta County, we have 58,234 single-family homes established in the county, of which almost 20,000 of them are owned free and clear. So if you think about that, almost a third of all the homes that are actually established here in Shasta County do not have a mortgage. That's good news. The next thing to look at, though, is just how many are in actual pre-foreclosure. When I just pulled up the numbers today, it's established at 84 currently that are in pre-foreclosure. And if you look at those that are already owned by the bank, it's averaging at 33 currently. So foreclosure market relative to the amount of homes that are in the market is really small. In fact, even the homes that are in pre-foreclosure, it's estimated that maybe only a third of those would ever even actually hit the market because they'd simply sell their property if they have the equity, or they might just reinstate their loan and just keep making their payments. The last thing to look at would just be how many homes are underwater. According to Property Radar, it states that there's 1,432 properties that are currently underwater. And what that means is that their loan exceeds what the established estimated home value is. And so those are the homes that potentially could be exposed or at risk. But if those folks are making their payments and they're continuing to stay up to date with everything, it's not necessarily a problem. So we just don't see the foreclosure market being anything for us to be concerned about. The next thing to look at is just interest rates. If you're watching this right now, it's averaging around 6.8%. We're all hoping to see those rates come down. And some of the most recent data that's coming out of the Fed, some of the recent data that's coming out economically speaking, is suggesting that we're moving into an economic slowdown. That certainly could mean that interest rates start to come down as well. Next thing to ask about, people were asking and commenting about, was just around the car fire rebuilds. In fact, I did an interview with the Record Searchlight recently. He said, well, how many homes are actually rebuilt? And right now, out of the 817 single-family homes that burned during the car fire, about half of those have rebuilt. And of course, the follow-up question is, why wasn't there more? And the biggest reason what we could see was the cost of construction has went up. The actual cost for insurance is higher, so some folks are moving out of that higher fire danger area. And really the last thing is that the topography there, a lot of those were on slopes because it was over in our west side of town, which is hilly terrain. Many of those properties just could not be rebuilt now at a reasonable price because of some of those constraints. So I don't think we're gonna see this massive influx of new properties being built on those burn lots. Unfortunately, I think it's just gonna be really, really slow going forward. The last thing to look at is just at the city of Reading. They did change something recently with the short-term rental market. Right now in downtown Reading, they're concerned about there being too many. So I think they're putting a cap of about 50% of total short-term rentals available in certain areas in the downtown. I don't think it's gonna have a big impact though. Even with the vacation rental permits that were offered to the market, they never even actually sold those all out. So there's still plenty of room in that vacation rental market. So In any case, I hope this answers a lot of your questions for the month. If you need anything else, just know we're always here to help. Thank you for taking your time with us today. Have a great day.